Good morning, everyone, and thank you very much for joining me this morning. It's the morning market review. It's Monday, it's the 20th of March. My name is Russell Shum, a senior market specialist at FXCM. Thank you very much for joining me this morning. I'm just going to go ahead and bring up a high-risk investment warning. And hi, Howard, thank you very much. Okay, and I'll just keep this on screen for a few moments. The news that's dominating UBS's takeover of Credit Suisse. Okay, so all the other news that has sort of made headlines seems to pale in comparison. And the question is there going to be some sort of contagion from that? It doesn't seem so at the moment, but you know, these things often build up a momentum. So we just want to be very careful. Let me go ahead and bring up the market commentaries disclaimer. Now we've got we've actually got two central banks this week, don't we? We've got the Fed and the Bank of England on Thursday, I believe. Fed on Wednesday. What's going to happen? So we're going to talk about the Fed in a moment. I also want to just let you guys know next week I'll be away. So just giving sort of heads up. I'll be away next week. References, market scope, trading view, and we'll take a look at the CME group as well. I want to start off by just tackling the question is there going to be a rate hike on Wednesday? And to me, there could be, but it would seem a bit odd. I'll explain to you why I think it would be odd for a rate hike. Clearly, there is market turmoil, but I think that's sort of a side issue. If you go through to the Fed's balance sheet, you can see there's been this huge spike up in the Fed's balance sheet over the last 2 weeks. What we have on the second chart is the FXCM US banks basket. And you can see how the banks basket has come down in the last 2 weeks. At the same time, you've got about 300 billion worth of liquidity that has been pumped into the system. So there has been a liquidity injection to support the economy, because I think that it's probably a little bit more tentative and tenuous than we imagine. And the idea here is that the fact of the matter is the Fed has pumped liquidity in to stabilize any potential upset, so to speak. And if they've pumped in 300 billion, which they have over the last 2 weeks, then tightening 25 basis points doesn't make much sense. It means that you are siphoning out the liquidity that you've just put in. That to me seems a bit odd. There is a counter argument. The counter argument is, well, if you don't come in with the 25 basis points, you're sending a signal to the market that things are, things are potentially quite bad. And I think, well, the case is we've got 300 billion that's just been put in. That in itself is a signal. So I'm not sure the signal argument holds water. If you take a look at the CME Fed Watch, it's a coin toss at the moment, 50-50. It's 50-50 whether we get the 25 basis points or not. 50% basically, well, 49.1 right to keep it as is, 50.9 to raise by 25. It's a coin toss. What you can see here is if we bring up the 2-year, I'm just going to bring up the 2-year, it's basically it's come down to under 3.7%. Almost seems to be telegraphing no rate hike, right? So almost telegraphing rate cuts, isn't it? So the idea here is I'm not sure we're going to get the rate hike on Wednesday. It's very difficult to say for sort of it's very difficult to say with any certainty that we won't, because it's a coin toss, right? But if we go back to the Fed Watch tool, take a look at this. Take a look at this table at the bottom. So if we go back a month to the 17th of Feb, well, there was an 81.9% chance of a 25 and an 18% chance of a 50 basis point. And that's slowly come down 1 week ago, 1 day ago, and now. So a week ago, it was 65-35. Now it's 50-50 almost. Okay, so you can see that as the banking crisis has unfolded, this crisis of confidence has unfolded, so the probability of a rate hike has come down. That is quite a challenging environment for us to be operating in, because it's come down in the span of a week from 65 to 50, and in the span of a month from 81 to 50. How do we make sense of that as traders? Well, that's our challenge. Is there a risk of contagion? And I would suggest not at the moment. The way that I am potentially gauging that is with the euro-US dollar. I think that if there was a breakdown in the European banking, we would see a big red candle here. Let's get rid of this. We don't have a big red candle. We've actually got a blue candle for the week. So I don't think that there is contagion. I think that the fact that UBS is taking over Credit Suisse probably is a huge stabilizing factor. They got it at an absolute bargain. They got it at 3 billion. With that, there's a backstop of 9 billion from the government. Plus, I think the Swiss National Bank is putting in something like 100 billion as a potential safety as well. It just seems that there's liquidity being pumped into the system left, right, and center. It seems to be limiting any sort of contagion, as I say, as per the euro-US dollar. Excuse me. What I want to do is just go through to the US dollar and take a look at the US dollar now. What we're going to do in terms of looking at the US dollar is look at this in terms of the zone. It's in zone 3, isn't it? It's in the lower blue, lower red zone. Well, that's the bearish area. That's not surprising if we don't get a rate cut, if we don't get a rate hike. If we don't get a rate hike, then this makes complete sense for the dollar to be trading in zone 3. And if we go through to the weekly chart here, it looks as if we may be getting some sort of head and shoulders here. Left shoulder, head, right shoulder. We spoke about that last week. Okay, so the idea here is it looks as if the chances of a rate hike are remote, but I can't say it's 50-50 at the moment. Gertie makes a very good choice here. Warren Buffett is sniffing opportunities on the regional banks. Yeah, and I think he has come in and saved banks previously, Gertie Piffar. I don't think this is strange territory for him to be in. And again, some sort of stabilizing factor there, isn't it? So the idea here is there doesn't seem to be very big chart. Well, I've got to be very careful here. It's 50-50 whether we get a rate hike, but the way that the markets are acting, they're almost acting as if there is no rate hike coming. By the way, what's driving that? There was bonds called AT1 bonds, alternative tier bonds, which were effectively released roundabout, or they basically, dare I say, invented around the 2008 global financial crisis. Basically, what they're called COCOs, contingent convertibles. So when a contingent event happens, they're meant to be converted into equity so that there's less stress on the balance sheet. Those have actually been all written down in this. Credit Suisse's AT1s have been written down, I think something to the tune of 17 billion, but I stand to be corrected there. So a whole lot of money is moving out of COCOs and are going into government bonds, and that's why you're seeing, so as money goes into government bonds, it pushes up the prices of the government bonds. The yields are coming down. Well, the yields are coming down just at a time when we think that, well, wait a second, possibly also signaling the unlikelihood of a rate hike. So we can see that the dollar price coming down. Well, if dollar's coming down, the next one we've got to take a look at is gold. We must take a look at gold. Okay, so let's bring up gold. And you can see gold here is having a superb run. And I think there are a number of forces which are supporting gold at the moment. Number one, the fact that the US dollar is coming down. Well, the US dollar is the denominator in gold. It's 1 troy ounce valued in dollar terms, right? Well, the denominator is the US dollar. Well, if the US dollar is coming down, then it's got to be benefiting the troy ounce. It's got to be benefiting the numerator. So the numerator here is benefiting. Second, it's a haven. Gold's a haven, right? Well, we're in highly uncertain times. So gold seems to be gaining some sort of bid of the fact that it's a haven. And then the fact of the matter is the bond yields are coming down. So when we talk about havens, we can talk about bonds, we could talk about gold, but the bonus of having a bond is that you earn a yield on it, you earn interest income, right? Well, if the interest income's coming down, then the opportunity cost is coming down. Well, that's a tailwind for gold as well. And you can see that gold's got this big expansion in its Bollinger Bands. And if you take a look at the, as long as the stochastic stays above 80, then we've got some sort of momentum behind us. And you can see this is, it bounced off of this support level. So support, resistance, support, and it's beautiful. This is actually a beautiful trend. We can put in a trough over here. I can put in a peak over here. And you can see here's the higher trough. And here's the higher peak. All right, so now the next instrument that we're going to look at is going to be the DAX. The DAX, I think, is a very tricky instrument for us to be considering at the moment, but we need to consider it because it's pulling back, and it's pulling back in an uptrend. And if it's pulling back in an uptrend, I need to update these charts. Bear with me a moment. Let's do it on this over here. Okay, let's bring this in. Okay, that's better. Just want to make it logarithmic. All right, this is the weekly DAX, and what we can do is we can put in the trough, peak. So you can see it's a beautiful trend. This trend here, here's the peak. Okay, here is the higher trough. Here's the higher peak. And what you can see is that the current, this is, look, we're looking at a weekly, it's only Monday. You can see that there is a spinning top here. So the DAX opening is in an uncertain environment. I think that the higher trough, higher peak is something that we need to keep abreast of. I'll put higher trough. Potentially, what's happening here? Potentially, there is some sort of stabilizing factor coming in with the UBS taking over Credit Suisse. And potentially, the rate hikes are now stopping. We've kind of reached the apex of the rate hikes. One would think that even if there is another 25 basis points, it's probably close to being the last. And without the rate hikes, we get some sort of extra tailwind here. We're getting a really nice pullback. Well, one thing for us to take a look at, let's just bring up Microsoft Paint. Is that the markets never move in a straight line. It's always when we get these pullbacks, though, that's when the real opportunities present themselves. Well, here's the pullback, Now we've just got to watch this very carefully. Is there going to be another movement up here? Okay. The other option is, of course, and this would be quite sort of savage, if we get a lower peak, lower trough, that would change it from an uptrend to a downtrend, but we don't have that at the moment. So we will give the trend the benefit of the doubt. It looks as if there's uncertainty. The bears not really sure they should be pushing down the DAX anytime much further. Let's just see if I've got some. All right, my charts aren't updating. I'm begging your pardon. Let me try get these. Let me try get this on this chart here. Let's change this to a daily. Okay, and you can see that we've got this big long-legged spinning top to start the day. Let's go down to the hourly. All right, and what we can do is we can keep an eye on this level here. So let's bring in an arrow. Here's a potential reference candle. It's the lowest low in at least 3 candles. And then here is the candle that is potentially, it's taken out the reference candle's high. That's condition 2. Condition 3 is to close above it. So there does seem to be some traction. There does seem to be some sort of stabilization that's come through. It's a high risk environment. The market seems to be suggesting that there are not going to be rate hikes. I cannot say more than it's a 50-50 coin toss at the moment, but we're going to watch it very, very carefully. That in of itself would be stabilizing. Remember, bull markets climb the wall of worry. Now, we just got to watch that euro-US dollar. If there is going to be a spread of contagion, I think it shows up in the euro-US dollar first. We see that come down quite hard. So we're going to have to watch that for the rest of the day. At the moment, it looks okay. Let's just see if the market can close above this reference candle's high. Okay, one other comment before tomorrow. There won't be a webinar tomorrow. It's a public holiday here. There won't be. And then next week, guys, just remember next week there will be no webinars either, but then we'll resume them the week after. All right, if there's any questions, please go ahead and type those through. Gurdeep just saying Warren Buffett took a bite of Goldman Sachs during the global financial crisis. All right, cool guys, let's wrap up here and we shall chat on Wednesday. Have a great day.